Hello, good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is holding on to the green. In fact, for most part of the trading session today, we have managed to cruise above the mark of 24,700. So no complaints as far as the frontline index is concerned. But it's the banking space which is coming under pressure. So you have the Bank Nifty, which is clearly underperforming today. That index, the last time I checked, was down almost 200 to 300 points. That data point should also come up for you on the screen very shortly. What's actually doing okay is pharma and FMCG. So both of those pockets are in the green right now. Names like ITC, Varun Beverages, they are in focus. Pharma names like Divi, Zipka Labs are also reacting to earnings. Some of these names in focus. Reliance Industries is also batting for the bulls today. In fact, off late, it has been on a bit of an uptrend just ahead of its AGM, which is lined up on 29th of August. Of course, there's a buzz on that stock, so we're watching out for Reliance Industries, up almost 0.5% to 1%. Other gainers include names like Jubilant Foodworks, 4% higher. In fact, this week has been so far so good for Jubilant Foodworks. We had seen a couple of upgrades come by earlier. RBL Bank is actually doing quite well today. And then Aarti Surfactants, that one is locked in upper circuit, I believe. Last time I checked, it was up 20%. So, yes, lots happening in the markets, and FMCG and pharma, they are the flavor of the day.
Yeah, they clearly seem to be the flavor of the day. In fact, starting it off with Divi's, because that's been a big mover from the word go today. The fact that they've won against the rival generic, which was Novartis's Entresto, and that's been stayed by the court. That's definitely acting as a big sentiment fillip for Divi's. It's been a big mover from the word go. Actually, not just Divi's. Look at the other components from within the pharma pack as well. They too are holding out very well. Cases in point being a Glenmark, Abbott, Biocon, Granules, Cipla. The entire pack has been seeing some decent moves from the word go. And then, of course, PNB Housing, that sizable block deal of 5.5% equity that's changed hands, even though at a discount, but got fully lapped up. Stock holding up 8.25% right now in trade. And you can see with the volume figures that the block deal has happened. The name, of course, of the buyer is only going to come in the evening. ICICI Securities, there's been an NCLT Mumbai approval which has come in for the scheme of arrangement of delisting ICICI Securities, which was a plan in the works already. So that's the other one which is also in focus this afternoon. Other than that, of course, the other buzzers are Jubilant Foodworks. We've been talking about the pharma recovery, the fact that pharma actually I beg your pardon, banks actually led the recovery in trade yesterday. RBL Bank was a big mover, and for a second consecutive day on the trot, RBL Bank is seeing some very decent traction. Right now as well as we speak, the stock is almost holding up 4% in the green. This Chambal Fertilizers, HPCL, these are all names which are springing up in action as we speak right now. But let's take it across to Kunal as well as Naresh. Nitin Raheja will be joining in on the fundamentals too to try and dissect what the market this afternoon is looking like. Kunal, hi, afternoon. A smidge of a pickup, much like yesterday, although a lot more narrower, but today led by pharma clearly.
Yeah, it's a case of sector rotation today, because yesterday it was led by banks, financial services name, metal stocks. Today it's a different set altogether, so which means that the markets are looking at a range based kind of a trading. So we are looking at for 24,600, 700 as a broad range for the index, as a support for the next couple of days. So I believe that that range could probably play out for the index given the way the sector rotation has played out. The good part which we are seeing on the index front in terms of data is additional bit of writing which has come back again at 24,500, 24,600 strikes on the on the put side, which means that there's been good amount of put writing which has happened at these particular strikes, incrementally higher as compared to the last couple of days, which means that we are now looking at potentially 24,500 as a very strong support for the Nifty over the very near term.
Okay, so that's a near-term, support which is there for the markets. But Nitin Raheja is also with us. Nitin, hi, good to be speaking with you. What do you make of the market mood right now? It's been sideways for a while now. Do you expect this trend to really continue? Because there's no major fresh trigger that we are watching out for, are we?
No, you're absolutely right. I think we've, even the results that have come out have, not really been, surprising on the upside. So in a sense, it's more of a settling down phase that we are seeing in the markets after the smart run up that we saw post the elections and the budget. I think we are in a phase of consolidation, and there is this whole sectoral rotation that we are seeing from time to time. In itself, it's not a bad thing because I think, there is a tremendous amount of liquidity that has come in. Valuations have gone up tremendously. So I think if we get in some sort of settling down and sort of a time correction, I think it will only sort of set the stage for the next leg up. I don't also see any reason for a dramatic correction in the market because the kind of liquidity that is coming in from domestics and the kind of liquidity that is waiting in the sidelines as far as foreign investors are concerned, would probably see that any correction is bought into. So I think we are in that zone where we get into some time correction.
Okay, some time correction. That's something that's going to play out along with the sectoral churn that we've been seeing on pretty much a daily basis. But let's revisit the big mover from yesterday, and that was the entire life insurance pack, be it in SBI Life, HDFC Life, all these stocks were springing up higher. Naresh, we were chatting about these stocks just yesterday, same time. Today too, they're holding up in trade. Do you think there is a meaningful trend here, or is it just a one-off move because the space hasn't done anything for almost 2 years now?
So when we see a breakout happening after 2 years, that is generally structural in nature, wherein it continues for the next 3-6 months. So that's the case. So if you look at HDFC Life, which was the first one, which consolidated from 2019, the stock had topped out at 650. Today also we are at 700, 730. So that's gone sideways. You have ICICI Pru finally coming at a 2.5 year high. Then you have other names also. It's only SBI Life which has been a leader. So out here, it looks like a structural trend change in the whole insurance pack, and we would continue to see buying come in on every dips. So it's a buy on current levels as well as on dips with a 3 to 6 month view across the whole pack.
Okay, so that's a view coming in on insurance for the time being, but clearly the space which is doing quite well is urban consumption as well. Take a look at Nykaa, quite a bit of breakout on that one, 10% higher. Do you think, Nitin, this is the overall sequence of events playing out, all the new age tech companies firing away one after the other, because it started with Paytm, Zomato, PB Fintech did really well, and Nykaa was the underdog per se, which hadn't performed, and looks like that too is firing away. What's your view here?
So I think longer term, we're pretty positive on this whole pack because of one reason that I think post their initial listing and the fact that the VC traps have, or the PE money has sort of dried up. So we are really seeing a lot of these companies changing the business model and having a far faster path to profitability and low cash burn. And hence, as they are all sort of doing this, you're seeing the market starting to re-rate them. Among them, the belief is there will be some winners as the trend that they are addressing is long-term and real. However, it's, we have to yet see as more and more of these companies are coming into the public markets and, getting listed and now at valuations far more realistic than say 2 years ago. So I think clearly there is bottom-up oriented, if you follow an opportunity in some of these companies.
Okay, in the meantime, just want to take a look at what both Z as well as PVR are up to. There's been an ICICI Securities note which has come in on both with a buy rating, PVR with a target price of 2,000, Z with the target price of 195. Of course, the strong content pipeline clearly working out for PVR. They've had an excellent weekend with some of the big ticket releases like Street 2. So a strong comeback for theatre goers in that sense. And for Z as well, the note says that ad spend is likely to actually rise during festive season, traditionally as has been the spending pattern. In fact, they've gained market share in Malayalam, Hindi, Kannada as well as Tamil as well in the second quarter versus what they did in the first quarter of the fiscal year. Nitin, any of these media or exhibition stories which you like?
I like the exhibition space. However, the space has not really been a long-term value creator, and they're more of short-term tactical plays, depending on the kind of content that you see and the quality of the content that you see coming in the next 6 months. We are getting into the festival season. We are getting into season, and normally you have a lot of new releases come around there. So there, you should look at this more as a short-term tactical play. When we had consolidation take place in the sector, we thought there would be some element of pricing power that would come about, but that is not there yet in the sector. So it's more of a short-term tactical bet.
More of a short-term tactical bet. That's the view coming in. Just watching out for what else is happening in the markets right now. You of course have Deepak Fertilizers, which is doing quite well. Maharashtra Seamless is holding on quite okay. On the losing side, however, in the last few minutes, ICICI Securities has come off and it's been under pressure nonetheless. Vijay Diagnostics, Castrol India, these are some of the other names that we are watching out for. Quickly, Naresh, your view on pharma and which are the stocks that you would recommend from that pack?
So pharma as a space has been trending well. The names which have not done much and are looking interesting is first is Dr. Reddy's, which has been a slow and steady uptrend, so that could continue further from here on. Then there is Cipla, which has been knocking at that 1600 mark for the last few sessions. If that breaks out above 1600, could make a 10-15% move. So these are two large names which look interesting. The rest of the names are more small cap names, something like a Gufic Bio or a Copran, which are breaking out on multi-month charts. But the large cap space, we've seen a lot of names like Sun Pharma already do quite well. So I would be looking out for Cipla, Dr. Reddy's, and maybe some small cap pharma names.
Right, let's take a very quick break then on that note. We're looking okay for the equity market, 62 odd points higher for the Nifty futures right now. Actually, it's come off a little bit. 24,750 is where we're currently at, but a lot of individual movers, which we'll continue discussing after this quick break. Back with closing trades right here in ET now. Still pretty quiet out there and just playing around in a very narrow band from the high to the low of the day for the index today. Much unlike yesterday where it was once again a quiet start. But then banks and in fact insurance plays picked it up in trade and we had higher in trade yesterday. Today, of course, Nifty Bank underperforming by about almost 0.5%. But lots has been said about the railway stocks. In fact, Railways' big focus to improve and enhance passenger travelling experience as well. Railways is now planning to roll out 15,000 modern sleeper coaches in the next 3 years. The tender is the same, which is likely to be issued soon, but sources suggest that there will not be a single tender, but it will be issued in phases. Samir Dikshit, my colleague, is here with more details. Samir?
Railways eyes big focus on the passenger-centric train, but we are getting to know from our sources that Railways will be rolling out 15,000 sleeper-based coaches in next 3 years, and the tenders for the same is likely to be rolled out very soon. But sources have indicated that the tender will not be in a single go. The tender for the 15,000 sleeper-based coaches will be rolled out in phased manner. Some tender will be having a quantum size of around 500 sleeper coaches, where some other might be having a 1,000. So different size of tenders will be issued, but the larger goal is to roll out 15,000 sleeper-based coaches, and the composition will include both AC coaches as well as non-AC coaches. So with these sleeper-based coaches, Railways plans to come up with more and more trains that will be not just Amrit Bharat train, but it will also include Vande Bharat trains as well. So this will provide a big opportunity to the players like BEML, Alstom and several others to come forward and take part in the tendering process and can also back the order as well. Now, the quantum of the tender will be somewhere around 30 to 35,000 crore. This is because one LHB coach cost somewhere around rupees 2 crore. The manufacturing cost is around 15 million rupee to 20 million rupees. So this is a big tender size, and this will definitely help railways to roll out to more and more trains, and this will help to transform and upgrade the passenger traveling experience.
Okay, so railway stocks are in focus. Off late, we had seen that some of the defense companies and the PSU companies and railway names were coming off a bit, purely because they had run up quite a bit. But at least a positive news coming in now that there could be a fresh, bout of ordering that might come through. Nitin, what's your view on defense, railways, and the PSUs as a pack?
There is no two ways that, from a business perspective, I think that directionally they are on a good path, whether it's defense, whether it's railways. We will continue to spend in each of these segments. The only problem is the valuations at which they trade. And that leaves very, very little for disappointment. These are typically long drawn orders, and there could be delays as far as execution is concerned. From time to time, there could be volatility as far as commodity prices is concerned. I think almost all of these stocks are today priced to perfection, leaving very little room for disappointment. So I think we're just very wary from while we believe that as a policy, the government is going to continue to spend in the area. But from as an investing perspective, I think there is very little left on the table.
Okay, that's the take on some of the railway stocks. Kunal, you've been tracking some of the liquid names as well, right? RVNL, IRCTC. What are they looking on the charts?
See, I think they are going through a process of mean reversion because, at one point of time, likes of, IRCON, for example, the stock was almost at 340. The 200 DMA for the stock was at around 245, 255, range, which means a divergence of almost 40% higher for the stock from its long-term moving average. Same was the case with RVNL and many of the other names, IRFC, etc. In fact, the divergence was a lot more steep for many of the railway names like IRFC, where the divergence was almost 40% to 50% at one point of time. Now, what we've seen the last 2 months is a correction of this divergence, which was setting into this name. It's a natural process which happens for many stocks when they get into an overbought territory or when the rally extends a bit too much for many of these names. But I believe on the way down, whenever these stocks cool off, come back to the long-term moving averages, that provides the first case of a strong buying opportunity. At current levels, for example, for the likes of IRCON, the stock is at 265 approximately. The 200 DMA is closer to 245, 50 levels, which means maybe another 5% correction, 7% correction for these stocks. And it could be at a point where these stocks would probably have completed a major phase of mean reversion. So not bearish on the stock, but I think would probably expect a second round of correction, maybe a 5% to broadly 7% correction into these names, but that could actually offer good buying opportunity.
Okay, point taken. Just wanted to put the spotlight on Shriram Properties as well. We don't talk about this real estate company that often, but they've come out with a big plan for themselves. They're talking about very strong pipeline of launches in the next few months itself, 18 to 24 months. They're talking about how they're looking at doubling their sales, tripling their revenue, and making their profits 4x over the course of next 3 years, and that's the reason that stock is fairly excited. Naresh, what's the view on Shriram Properties and any other real estate name if you like?
So Shriram Properties, after that initial bump up, a lot of block deals went sideways and was slowly drifting lower. Today is the first day where it has seen very large volumes. That's an indication of a trend change finally for the stock. And now it's all set up for a move to cross that 140 mark, which was the previous top. So in terms of stocks, continue to like Sunteck Realty, which has sustained and given a breakout of a 5-year consolidation. Second would be Kolte Patil, which has finally seen some price volume bump up. The stock corrected from 550 to almost 350 levels over the last 3-4 months. Looks like a good interesting price point to enter into the stock sub 400 levels. That is the price where it was in 2018. So looks interesting. Kolte Patil could be the best risk reward as of now in the whole real estate pack.
Patil for you within the Realty pack, that's what's popping on the charts. But Nitin, so good to have you on the show. We'll let you go on that note. Get in some closing trading ideas as well. Kunal, what's on your list?
So I'll pick a high risk or a high beta stock over here. That's Saman Vedanta. That's a chart which is coming back into a breakout, back again above the 50-day moving average after quite some time. For the stock. So looks attractive, closer to 445, 455 range where the stock is trading right now.
Right. Naresh, what about your closing strategies?
So that would be a buy on Hindustan Unilever. The stock has broken out of a small flag formation and we are seeing finally momentum come up in the whole FMCG pack. The stock has been a major underperformer. So expecting it to notch up a fresh 52-week and all-time high.
Let's take a very quick break. Then on that note, when we come back, the last half an hour of trade this afternoon.
Welcome back. Well, for the markets, we are holding on to that gain of around 24,750 on the Nifty, so just around that level. PNB Housing has managed to inch up further. That large trade happened earlier in the day. After that, the stock was up 6-7%, but right now it's high by 11% at the highest point of the day. Alok Industries is in focus. Deepak Fertilizers, Castrol, Century Textiles, these are some of your other names that we are watching out for. Though some of these brokerage companies are coming under pressure. So Nuvama Wealth and ICICI Securities. Of course, ICICI Securities has its reason regarding that delisting which has been, under contention. So all of these stocks are buzzing on account of that. Dipan Mehta also joins us on the show. Dipan, hi, good to be speaking with you. Any fresh ideas that you have been able to kind of find in this market right now? Okay, we'll try and reconnect with Dipan in a bit, but in the meantime, let's hear out what Sumit Nagar of Malabar Investments had to say. They, of course, have been fairly active both in the public markets as well as the private markets. Hear out some of their latest recommendations, or rather some of their latest views on some of the stocks.
In affordable housing finance area, especially in southern part of the country, they are the biggest player, right? So the likes of SBI, PNB, they're generally not operating in affordable housing finance area because it's a very tough underwriting. The ticket size of the loan is, 8, 9, 10 lakhs. Their biggest competition actually comes from money lenders who are lending at a much, much higher rate. And that's the reason why Aptus has continued to grow more than 20% every single year going back a decade. This is a very underpenetrated area. And that's where the opportunity lies. You have the strongest player in one region of the country. They can potentially expand contiguously, beyond there. Long runway for growth. There is competition, but they are by far the most efficient player in that market, and it reflects in their financials. Like if you look at their ROA, they are best in class. Nobody comes even close. So that's the opportunity, right? Having said that, it was true a year ago. It was true 2 years ago as well, right? The markets haven't appreciated that, and it hasn't done well. But it doesn't mean the value is not accruing. They've continued to grow their earnings at a pretty rapid rate. The book continues to grow. ROE keeps improving. And eventually, at some point, market will take notice.
Okay, bunch of stock ideas there coming in from none other than our market expert, Sumit Nagar. In the meantime, just taking stock of what else has been holding up, look at for RBL Bank. Kunal, in fact, for 2 consecutive days, this has really been on a tear, RBL Bank that is.
Yeah, it's making a very good comeback, and I think it gels with the theme that the entire banking index is seeing a good round of short covering, and it's been led by larger cap names, of course. But the mid cap end of the banking name is where you've seen some good recovery. Now, RBL Bank, over the last 1 month of this correction, the stock had seen from 260 levels to 225, 220 odd, which the stock tested a couple of days back, had gotten below its long-term moving averages. So what this move is doing for RBL Bank is more of a resurrective move where the stock is coming back above its long-term moving averages or on the verge of coming above its long-term moving average at 228 to 30 plus mark. So I believe once the stock sustains about those levels, we could be seeing this initial flurry of short covering resulting into more of a long built-up and gradual trend picking up into this name. So bullish on the entire banking space. And I think specifically for many of these stocks like RBL Bank, even Bandhan Bank, over the last couple of days has seen some good short covering. So I would probably believe that we are at a cusp of short covering from many of the beleaguered banking names. So I think in terms of a short-term trade, one could look out for buying the underperforming stocks over here, and even the likes of Kotak Bank, IndusInd Bank, etc. can perform pretty well.
Okay, point taken. So those are some of the banking names that we are watching out for. But e-commerce is, of course, one space which has been doing very well in the country. But there seems to be some red flags that the Commerce Minister, Mr. Piyush Goyal, is looking at. Hear out what he had to say earlier on the matter.
Are we going to cause huge social disruption with this massive growth of e-commerce? And I don't see it a matter of pride that half our market could possibly become a part of the e-commerce network 10 years from now. It's a matter of concern. I don't deny that e-commerce has a role. But we'll have to think very carefully and cautiously what that role is, how that role can be in a more organized fashion. Is predatory pricing policies good for the country?
Okay, so that's a commentary coming in from the Commerce Minister talking about what's happening in the e-commerce industry. Of course, it's not that they don't want to support it, but at the same time, he's just talking about how it's really impacting the overall, situation as far as commerce is concerned. But looking at some of the other big buzzes in the trading session, Just Style is doing quite okay. CSE is something which is up in the trading session. Mazgaon Dock is the other one. In fact, it's an interesting case because Mazgaon Dock earlier in the week was reacting negatively to that ICICI Securities note that had come in. But now at least it's managed to recover a bit. But Shriram Finance is also something which is talking about how the overall vehicle growth has been strong so far. There are no red flags as well as the credit growth is concerned. Here are the conversation my colleague Anurag Shah had with the management earlier today.
I don't see any shortage of demand. There is enough credit demand. I think in passenger vehicle, we do see the report saying that newspaper report there is a pile up of inventory. But if you go and ask in auto showroom, you see that there is a waiting period. So maybe for certain model there is a waiting period. Certain model is not moving fast. There could be some reason. So we are not very sure. But there is no slowdown as of now for credit demand in auto.
Okay. And sir, now we are entering into the festive season starting after the Raksha Bandhan till the Shera Diwali. So you think that demand will pick up more?
Definitely. The demand will be very high during the, it is a typical between Dasara to the Diwali time. There is a high sales in two-wheelers because the demand comes from the rural market. Once the harvest goes to the market, people get the cash. People do buy new vehicles, and the most of the demand for the vehicles comes from the rural market for the base model cars and for the two-wheelers. And to some extent, others also, urban market also will like to buy something in these festive periods. So overall, the demand will be much better at that time.
Present status of your stake sale in the housing finance business, you have received the CCI approval. By when this transition will get concluded?
The housing finance, I think it is with the regulator, and as and when it comes, approval comes, they will do it. We are targeting by this year end, by December end, hopefully we'll be able to complete the formalities.
Okay, that's the take coming in right now on Shriram Finance. In the meantime, the government is also likely to launch a tender for up to 15,000 megawatt of thermal power projects this fiscal itself. Now, this move comes amid rising power demand and the final contours are being discussed with the stakeholders. Prakash Priyadarshi, my colleague, is here with exclusive details.
Yes, we are learning from our sources that the Power Ministry is likely to invite tender for 12,000 to 15,000 megawatt capacity of new thermal power projects during current financial year. We are given to understand that the ministry is finalizing the contours of the tender at this point of time, and that will be issued in phases. Along with that, we have also been informed by our sources that the ministry has held several meetings with the project developers and GENCOs. Along with that, a separate meeting has held with the NBFCs such as REC and PFCs on this issue. Along with that, as you were aware that the government is planning to add 80,000 megawatt capacity of new thermal power projects by the year 2031-32, and the target is to increase overall installed thermal capacity to 283 gigawatt from 214 gigawatt by the year 2031-32. Along with that, the ministry has also reviewed under construction thermal power projects with capacity of 26,000 megawatt, and we are given to understand that out of 26,000 megawatt, 19,000 megawatt capacity of thermal power projects are likely to be commissioned during the current financial year. Along with that, sources are also informing that the government is planning to add new thermal capacity in order to meet rising power demand in the country on back of economic expansion, and therefore these preparations are being done. Along with that, if you look at the peak hour power demand is expected to cross 277 gigawatt by the year 2026 and 366 gigawatt by the end of financial year 2032.
Okay, so yes, peak power demand is as it is increasing, and we've heard these conversations earlier as well that the power capacity in the country needs to go up, but seems like it's now taking a bit more solid shape because 25,000 crore worth of orders might be in the pipeline. Power grid has taken a bit of a knock, and that's because of the news that was flashing for you earlier. One of the HVDC plants have actually been taken back, so that's the reason that that stock is under pressure. Remember, that can have an impact to the tune of almost 12% to the company's earnings. Some of those lines we'll flash for you shortly on the screen as well, with the graphics playing out as well, and that will explain why that stock has taken a sudden knock. Fatehpur Bhadla HVDC was the project that has gone to be rebid. 12% hit to reported work in hand could be the case. So the order book dwindles for Power Grid, and that's the reason that stock is down. But today we actually spoke with Rupesh Sankhe as well of Elara to understand what his view is on the power sector and which companies are the ones that he likes the best. Hear out his view.
So in terms of topics, we'll like CESE, Calcutta Electricity Supplier, which is trading at a discount to other private players, and now they have entered into renewable energy. So they have 3 gigawatt of 2.5 gigawatt of operational capacity, and they are adding close to 3 gigawatt in the next 2 to 3 years, and another 7 gigawatt there in the pipeline. So they are taking their capacity from 2.5 to 10 gigawatt in the next 5 to 7 years. And they have strong operating cash flows. We don't see any funding issues there. And the price to book value is trading at 1.6 times price to book value, which is a 60% discount to other players which are trading at 3.5 to 4 times kind of price to book value. So in the mid cap, we prefer CAC. In the large cap, we continue to believe the NTPC has a lot of option value from pump hydro storage, from renewable energy arms, and the new fresh thermal ordering which are expected to come because of demand supply mismatch. So there is the NTPC is a key beneficiary out of that. So they will get a significant thermal ordering ahead.
Okay, that's the view coming in from the House of Elara. In the meantime, let me welcome on board Dipan Mehta, Director at Elixir Equities, joining in the show right now. Dipan, hi, afternoon. Good to have you on the show. What's it that you've been doing in the market? Just riding the wave, or is there anything where you've profit taken or maybe even added positions?
Good afternoon, and thank you for having me on your show. No, I think we are just been pretty much quiet in the market at this point of time. The valuations certainly are not comforting, and we are sitting on a reasonable amount of cash for the time being, waiting for a correction whenever that comes. It's been quite a while. I think since COVID, we haven't seen a serious correction, and markets have kind of absorbed all the positive news flow. So we do feel that there could be some technical correction also could take place. Whenever it does, we are ready with our stock list and ready with our cash to invest. But chasing values at these levels doesn't make sense. And that I think I speak more out of experience, having seen so many bull markets, that if you tend to buy at the tops, then 2-3 years down the line, the returns tend to deteriorate. And right now, I think valuations are really rich for a lot of good quality businesses, and finding new stock ideas is really a challenge as well.
Finding the right stock at the right price is clearly a bit of a challenge right now, but just taking a look at what's happening to the frontline index, because we are at the highest point of the trading session. Just wanted to check as to which are the stocks which are actually driving this up move for the market. ITC, of course, was something that was doing quite well in the trading session. It's contributing 13 points. Bharti Airtel has managed to perk up. Titan, HUL, TCS, these are some of the other names which are in the green. But private banking names continue to lag. In fact, private and public bank both. So HDFC, ICICI Bank, SBI, they continue to be under pressure. Dipan, at a time when you are saying it's difficult to find value and a lot of stocks have run up, you do have banking names which are available at a price which is, of course, much cheaper than what the peak has been. Some of these stocks have practically given no returns in at least last 12 months. Would you be a buyer on dips for these stocks then?
Not really, partially because a lot of stocks already are overowned, and in a lot of portfolios, including ours, we are owning a lot of banks. Optically, they are cheap, but these stock prices have gone nowhere because, as I said, they're overowned. B, they are the favorite counters for FIs to target. They're selling when they are trying to liquidate their holdings in India. And also, the third aspect is that growth rates certainly have slowed down. A sense of stagnancy has come through. In the case of banks, the key parameter to measure growth is pre-provisioning profits, and those clearly have flattened out for various reasons. And even the growth rates, credit growth, deposit growth has slowed down. So in a slowing environment, you can expect the P multiple price to book to get compressed. But I'm still hopeful of the long-term prospects of the banking sector, and we remain invested in top banks, be it PSU, private sector, and wait for the cycle to turn around for these banks, and at that point in time, they can again get leadership position. But for the time being, I think it's best to just stay cautious. But yes, in your portfolio, if you are underweight banks and you are sitting on some cash, then this is a good contrarian play, and you could look at buying into some of the banking shares as well.
Get in some BTST trades as well on that note then. Naresh, let's have your list first.
So first would be a buy on Hindustan Unilever. We've seen a good breakout in the whole FMCG pack. So expecting this to follow up. Stop loss at 27.65, target price of 28.15. Second is a buy on HDFC Life, which has given a new 52-week high today. Stop loss at 715, target price of 750.
Both Unilever as well as HDFC Life coming in from Naresh. Kunal, what about your BTST ideas?
So I'll go with the buy on TCS. That's a chart which is looking attractive. One of the best performing stocks in the IT space over the last few weeks. So would look out for targets in the range of 46.50. Stop loss could be kept at 44.50 now. And the second would be buy on ITC. That stock is also inching towards a breakout about the 505, 510 range. It's a major resistance for the stock. But looking at the recent bout of momentum, expecting this breakout to happen pretty soon. Buy with a target of 525, stop loss at 490.
Naresh, what about the charts of CESC and Power Grid? CESC has had a very good run, and we should probably pull up a 3-month or a 6-month chart because that will tell you the kind of re-rating that one has seen. And Power Grid, it keeps on getting these bouts of sudden buying interest and then sideways moves, etc. What one should do with stocks like CESC and Power Grid right now?
So CSC has been in a strong uptrend ever since it broke out around that 90-100 mark, and the power sector has done well. This was the last one to catch up. After the recent move to 190, the stock has consolidated also for a period of 1.5 months. So the trend is still positive. One could look at again making a move towards 200, 220 levels. On Power Grid, looks like a sideways consolidation going on after that consistent move over the last 1.5 years. Any dips back to 300, 310 would be a buying opportunity for now. Apart from that, if it starts sustaining about 355, that would be a fresh breakout. So if in this dip, if it continues to dip a little more lower, would be a good opportunity.
Bunch of other buzzers in trade today. We've been highlighting PNB Housing, which is up a staggering over 8%. That 5.5% equity block deal that happened earlier today. And the likely seller seems to be General Atlantic Singapore Fund, which has offloaded stake in this one. In the meantime, there's also Genus Power. That's quite interesting. In fact, the run-up in the stock has been quite staggering. They won 3 letter of intents worth about almost 3,600 odd crore rupees with supply, installation, commissioning with FMS for about 4.26 million smart prepaid meters. The total order book for the company now stands at a staggering 28,000 crore rupees. Dipan, as limited as the listed space may be when it comes to smart meters, but clearly this is one space wherein you have small players like a Genus Power now becoming big, and then of course you have big mega corporates like Adani's as well into that same business. Opportunities here, you think, and should one not look at valuations and the run-up in the stocks?
No, I think Genus Power has been a great wealth creator, and it's a multi-bagger stock. A lot of investors did ride this particular stock, and the key aspect, of course, is the multi-year kind of order book position, which provides a lot of earning visibility. And they have been good at execution also, which is reflected in good appreciation or increase in the turnover and profits as well. Maybe at an opportune time when it is available at a reasonable valuation, when there is an overall correction in the market, that may be a good entry point. But what Genus Power does, I think very few other companies are in the same line of business. It cannot be compared to Adani or any other utility company. We are seeing there's a huge menace of power theft, and companies like Genus Power have a very important role in trying to improve the yields or realizations which transmission companies can get from their network. So it has a long, I would say, great runway for growth. and excellent prospects. And you can I'm just astonished at the order book position and surprised why there are not more players in this business.
So that's the word on Genus Power. In fact, yes, a lot of these smart metering plays, the likes of HPL, Electric, etc., have done well. GMR Power also is getting into the smart metering space because there's a huge opportunity there, and some of these companies have bagged large orders to back their order book as well. What else is happening in the market right now? Where Narayana Health is actually seeing a bit of a perk up. Lemon Tree Hotels is also doing quite well. Kalyan Jewelers is the other one which is holding up smartly. On the losing side, Maharashtra Seamless is coming under pressure. Angel One is down as well. From the FNO universe then, Jubilant Foodworks has had a good run, and RBL Bank as well. Bandhan Bank, I think Kunal just talked about. Kunal, Jubilant Foodworks as well as Varun Beverages, what would be the view?
So both of the stocks are bullish. Jubilant Foodwork, in fact, the stock has completed a very huge kind of a pattern. It's a double bottom pattern on the monthly charts for Jubilant Food. The stock taking support at 450 mark. I think a couple of months back, the breakout point for Jubilant Food was around the 555, 560 mark, and from there on, the stock has looked very attractive. So I think from that point when the stock completed this double bottom formation and the breakout above its 200 DMA, we've seen a different kind of a chart price pattern for Jubilant Food. The stock has been a lot more consistent, very less degrees of volatility for the stock price. So I think that indicates that on the way up, the stock will probably see a lot more higher volumes, and on the way down, whenever the stock gets into a mild corrective phase, the beta of the stock would drop down significantly. Varun Beverages, on the other hand, the stock in the last few weeks has been a lot more volatile. We've seen the stock recently correcting from 1700 to almost 1420, 1425. Where it coincided with the key moving average for Varun Beverage. But from there on, we're seeing a bounce into the stock price. It's still not retraced more than 50% of that 350 odd point correction from the recent high. So we'd probably wait out for maybe another 50 to 70 points on the upside. Say if stock crosses 1600 levels, we could be looking at a strong revival prospect for Varun Beverages on the short term aspect.
Okay, point taken. So that's the view coming in as far as Varun Beverages is concerned as well. You do have Manappuram, which is actually holding up. Motherson is doing quite okay. However, having said that, Godrej Properties is coming under pressure, Aurobindo Pharma, Dr. Lal Path Labs as well. Dipan, what's your take on autos? Because that sector was doing very well. We were all talking about the SUV craze that had taken over, the EV tailwind and all of that. But there are chinks in the armor now. Inventory seems to be piling up. There are these murmurs of higher discount. Not sure if the street is making too much of all of this news flow. How should one weigh in on the auto sector right now?
Yeah, also, and you could add that monthly volume figures have certainly come off. And the kind of benign raw material scenario which they had, that may not last going forward as well. There could be pressure on bottom line. A lot of the premiumization play also is over and done with. But this is a bull market, and a lot of positive news is getting, the negative news is being ignored. So I'm very cautious on auto shares at this point of time. There could be a cyclical downswing. It could take 2 to 4 quarters. Long-term prospects are great because of low penetration, but we should expect lower profits or flat profits for almost all auto companies over the next 1 year or so. And I don't think that's completely been factored in the stock price. So you could expect auto to underperform. But if you're a long-term view, 3, 5, 10 years or so, then I think you're still fine. But you need to keep in mind that there's a huge disruption also taking place within the auto industry in terms of competition from EVs. And how that shapes up is a key monitorable.
Okay, so that's the take coming in as far as the auto sector is concerned. But yes, Solar Electric, the latest debutant there, has had a good run. Today, of course, it's a bit somber, but nonetheless, just watching out for how the space is overall tracking at the moment. Overall, for the markets, we're holding on. There's no major news flow which is expected tomorrow as well. So it's a very sort of a subdued week that we have. Yes, global cues are there with respect to the Jackson Hole Summit, but not a direct correlation. Tomorrow, of course, is going to be the weekly options expiry. Ahead of that, Naresh, would you be carrying forward any trades?
So continue to be bullish on the overall index. Maybe Bank Nifty could be a trade going forward. Because today has been a good recovery from the lows in the last 1 hour. So it could see a follow-up and maybe cross that 51,000 mark.
Okay, just about winding up trade as well. Dipan, Kunal, Naresh, thank you all of you for joining in for the last lap of the trading session this afternoon. In fact, I'm going to hand it over to Snehi and sum up all the trade in action today.
Well, yes, let's take a look at how today's trading action has panned out, and Nifty stellar recovery being seen on that front. Almost 120 points higher from the day's lowest point, and Nifty has actually ended at the day's highest point. You also have Nifty Bank recovered more than 400 points off the day's low, so but has still been slightly under pressure, so ending the day in the red nominally is Nifty Bank. Let's pull up the broader markets, take a look at what they did, because Nifty mid cap was largely in tandem with what the benchmarks are doing, but Nifty small cap was a real outperformer in today's trading session, more than a 1% tick coming in on Nifty small cap as well. Let's talk about sectoral moves today, which sectors did well. You had Nifty FMCG, that was the top sectoral gainer, 1.4% gain coming over there. Media, pharma, metal, auto, all of these sectors have ended the day in the green. However, on the flip side, Nifty Realty was your big loser in today's trading session. Phoenix Mills, Godrej Properties and more stocks in this sector led to the fall being seen over here. PSU Banks, Nifty Bank and Nifty IT nominally has ended the day in the red as well. Let's take a look at some of the big buzzers in today's trading session, and you have the likes of Alok Industries, Adani Wilmar, PNB Housing on the back of that block deal that we saw coming in the morning today. That stock was up in a buzz in today's trading session. You also had Cyient DLM in focus on the back of the block deal by its parent Cyient International, so also keep an eye out on that. You had GET and D promoters are considering a slight stake sale. On the back of that, that stock was locked in lower circuit today, 5% lower. Genus Power on the flip side locked up in upper circuit of 5% today on the back of an order win, and Dhanuka Agritech also will be mulling a share buyback. In fact, its buyback will be opening tomorrow. So on that note, the stock also held up pretty smartly today. Thomas Cook has launched a new app in collaboration with SOTC. On the back of that, that stock was higher by almost 5% upper circuit last I checked. There you have it. On the back of brokerage notes also, take a look at Varun Beverages, because that stock held up pretty well today. You had BOFA coming out with a note. They maintain a buy rating and the target price of 1,840 rupees on that stock. So Varun Beverages also held up pretty smartly in today's trade, 3.5% higher. Another space that was in focus today was the entire life insurance space on the back of their July operational performance. SBI Life and HDFC Life, two stocks to watch out for, because HDFC Life did pretty well. SBI Life, however, was a slight bit of a weak performance coming in, but that was also on the back of a bigger base coming in. Also talk about some other big gainers today. You had Nykaa, Just Style, Castrol India, Narayana Health, Century Textiles, Lemon Tree. All of these stocks were up anywhere between 5 and 9%. However, on the flip side, if you take a look at the big losers, ICICI Securities, Nuvama, Torrent Power, Godfrey Phillips, all of these were your big losers today, anywhere between 3 and 7% lower. But well, yes, that's how we are shutting shop for the day. Nifty 24/7 83.2. That's where we end the day.